Alright, hi, my name is Dylan and welcome to my daily trading analysis video. Today is 29th of August, time now is 10:30 in Singapore, 10:30 AM in Singapore. So today gonna look at a few currency pairs again. The very first one I would like to look at is the Kiwi against the dollar. So right here what you're seeing is a weekly chart. So as we can see, price has taken a reversal ever since it touches the previous high over here, as you can see. And then looking at the downside, we can see that the price has been supported by the 200 EMA pretty well. Even as we draw a trend line, there's still pretty much a lot of space for the price to fall even further. Zooming to the day one chart, just want to plot a key support level over here at the price of 0.8106, roughly there. We can see that this level is a very sensitive level when it comes to supports, such as this area, or a resistance at this area, and of course turn support again at this area itself. Alright, so the thing is that is this a good time for a short? Well, previously the only thing that we got to look out for is this resistance level. Right, you can see that, sorry, you see the price has been resisted quite well here and here as well, and then it turned to the support level. So we have taken note that the price has already broken above below this level at 0.8413, and therefore we are actually looking at price to fall even further to the next support level at 0.8106. So let's zoom into the H4 chart. We can see the price has been resisted by the 55 moving average over here, and a reversal candle has appeared as well. Alright, so if we're gonna enter a short trade, preferably we would like to place our stop loss above this level at 0.8413. I mean above this level at 0.8413, and therefore a good stop loss level would probably be somewhere at 0.8449. And looking at the downside, of course, that would be the next support level at 0.8106. So I guess the risk to reward ratio is still pretty healthy. Yep, so that's all for the Kiwi against the dollar. Oh yes, and by the way, if we take a look at the weekly outlook, based on the economic data, trade balance has already fell into a trade deficit. Building approval has fell as well, and finally this morning itself, ANZ business confidence has dropped too. So pretty much everything is pointing down towards the downside. Yep, so that's the thing. And next we'll look at the pound against the yen. I did went through this pair in 27th August. So just a very quick recap is that you can see this trend line over here. Price has got us supported by this rising trend line, and the thing is that zooming into the H4 charts, price has also got resisted at this falling trend line. So we are waiting for a breakthrough. Okay, we are waiting for a breakthrough, and I did mention that a good price to enter is this level at 171.81. So it did happen as it got resisted, came down, hit this support level at 171.81, or yes, and therefore this right now could be a good time to enter a long trade. but just take note that the risk that you have to take is pretty huge, at least about 200 pips. That's quite a lot. But of course you can always control your lot size, you see. And if we look at the upside all the way back to the previous high is over 200 pips, close to 300 pips, so still not too bad. But if you would like to wait for a better price, well, you just have to wait for the price to come all the way back down to the rising trend line here. Yep, so the decision is yours. And that's all for the pound yen. And finally, just want to quickly go through the gold against the dollar. As I have plotted this symmetrical triangle again back in 27th August. So we can see that price has already begun to rebound. It's gaining traction. I have long this pair and it's currently running over somewhere about 600 to 700 pips. And so far I do not see any signs of reversal or exhaustion, except for a very short retracement. Alright, this is a H1 chart, so we can see that it is still riding pretty well on the trend line. Yep, so if you have taken this trade, it's best to just hold it for the time being, and yeah, do nothing about it. Just don't do anything about this yet. Wait for price to appreciate a little bit further, and you may want to shift your stop loss to entry price to attain a risk-free trade. Alright, so with that, that's all for today, and thank you for watching. I'll see you again.